this because the classes that we're doing in January, I want to record as well. I wanted to go live on YouTube actually, but because they stay there. So the problem with the live on Facebook, which I've been doing in our group, is after 30 days they delete. So all the classes are gone after 30 days. So I want to get them on YouTube, and I wanted to go live like from my phone or something, which would have been better audio quality, everything. However, you have to have 50 subscribers to do that from mobile, not from a desktop though. So whatever. So I'm just going to record it and then upload it later, and how it works and the audio's good. We'll go from there. Okay. So I'm going to use the board, so we'll just get started. So taxes. The thing that those other classes have been kind of leaving out is how do you file taxes personally and what's the best way to do it. Now, I'm going to start off by saying I am not a CPA. I do not do taxes professionally. I have a CPA, but I'm going to share with you guys what's worked for me and how to maximize your dollars and keep them in your. Okay, so there's two options here as an agent, and there's just a single agent, kind of, you're a personal entity, right? You just are who you are. And I'm just going to use some numbers, and you can adjust them as you will. But what we're going to do is we're going to take like an income annually of 100K. Okay, so if I make $100,000 a year, and I'm a single person, right? I get a tax deduction every year, standard deduction of 24K, right? So I'm getting the deduction of 24, and that leaves 76. No, 76. You guys are gonna have to help me with the math. So there's $76,000 that you're being taxed on. If you have a federal rate about 20%, then that's gonna be 15.2, right? Right? So minus, let's just say 20%, right? And that's going to leave you, that's going to be about 15. Right? So you're going to end up with, just for easy math, you're going to end up with about 60. 60K is what you end up with. Now, from that 60K, you end up having to take out all of your expenses. So think about your, minus MLS. What else do we pay for? Marketing. What else do we pay for?
Gas.
I mean, over a year, it adds up, right?
Mileage.
Okay. You can only do one. Well, gas is mileage, right? Same thing. So. Okay, what else?
Out of that 60, do you still?
I mean, a 20% tax bracket, I think, is going to incorporate all of those. Most of us aren't actually at 20%. Once you do your taxes and you look at like what you make, and most of us kind of that would include all of that. But for simple numbers, we'll say it includes it. Okay. What else do we pay for? Classes, licensing, right? Okay, so you guys know these things add up, right? It can be quite a bit of money. So we'll just, somebody give me a number what we think all of that is. Yeah.
At least, like.
So since we have even numbers, let's just call it 10 grand, okay? So this is all 10. So at the end of it all, right, we end up with like, okay, right? So we made 100, right? And we end up with very, very little. Well, no, that's not true. So, because we're paying 1,585 minus 10, so we end up with 75. Okay, 75K. I did that wrong.
Where did you do that?
Yeah, where'd you do it wrong? I see.
So it's 24K is a standard deduction, not an actual deduction. Right. So so you have 76K you're taxed on. You're taxed 15.2. So I just said 15 of 85 and then minus 10. So, does that make sense? Mm-hmm. Okay. So you actually have an effective rate of about 25%, including, all of your expenses. Okay. So now and how many of us are doing it this way right now? Yeah. Okay, cool. All right, good. So let's talk about the way I do it and what I think it would work for almost anybody in this business, okay? and just so you know, I didn't start this when I started the brokerage. I was doing this before that, okay? When I was a single agent, this is what I did. So I set up an LLC, okay? That's not a daunting task. It's a very simple LLC. You don't need to have a CPA write it up and make it for you for $700-800. You don't have to do that. You can go online. Dropbox has a program called FormSwift, and I'm pretty sure they have one in there that you can literally pay them $35 for the month. You can download it, make it, put your names in there, boom, and then you just file it with the comptroller of the state. Okay? Or you just go straight through the comptroller. There's ways to do it that are very simple, so don't be put off by that. It's not a difficult task.
Can't we do that right here in town?
You have to file your LLC with the state. If you're doing a DBA or anything like that, then you do it with the county.
Okay.
Okay?
Incorporate a DBA with your LLC. So you just
Well, DBA is simply doing business as, okay?
Yeah.
So you fill out a form, a one-page form, you take it downtown to the courthouse, and you say, this is my DBA. It just says, this is what I'm doing business as. This is my LLC. This is my tax number, blah, blah, blah. Okay?
You name your LLC what your DBA is?
You name it as close as you can. It's a big state and a lot of names are taken. You know what I mean? So just make it simple. Like we ended up doing MAG, which was literally my wife and I's initials, because all of the cool names that I thought of were already taken somewhere. And it doesn't matter if it's, Dallas. It you know what I mean? It doesn't matter. El Paso. It's just still it's a business that's filed in the state, so you can't have it. So you just figure out what you can, and if you can't find one that you like that you're actually going to use, keep in mind as a single agent, it doesn't even matter. You don't need a DBA. You're just doing this for tax purposes, right? Because you're still Stacy. When you do business with people, you're still Stacy. Even though you have a LLC, a broker cannot pay an LLC. They have to pay the individual, okay? And we'll go over that in a second. So, the next thing you're going to do, you're going to file this, and then the next thing you're going to do is you're going to file it for tax purposes as an S Corp, okay? The reason you file it as an S Corp is because that makes you an officer of the LLC for taxes, okay? So, as an S Corp, you are not paid. You're an owner, okay? So the first thing so once you have this set up, okay? So you're an LLC filed as a S Corp, okay? Now that you have that, we're gonna start having earnings, right? So you need a bank account that is dedicated to this LLC. Okay? When you get money, it is going to go directly into this account. Okay? So that it's separate from personal funds. Okay? So I'll just draw a little diagram here. So this is your account. Okay? Money goes in. You get commissions, you get anything at all that is income, it goes into this account, okay? The first thing that comes out of that is expenses, right? Not an S, stupid. Okay? So you have your expenses, all of these, right? These all come out of this account, all right? Now, there is a little bit of a difference in this next step depending on your situation. If you're in a situation where you're the breadwinner, then you have to draw from it to pay your bills. If you're not, don't use it. Okay?
You're every husband's dream for I'm like, what are you talking about, Willis? Like,
Yeah, I'm just telling you what's worked for me. Okay.
Uh-huh.
Now I am the breadwinner, so we have to take it. But here's the thing. Okay. So I have this 100K, right? That I made. Okay, and it all went into this account. All right. Once it's in. Okay. So keep in mind, as an S corp, in this account, nothing is taxed. Okay. An S corp is never taxed until draws are made. Okay. Now you do have to file business taxes every year, but they just want to account for what's gone in and what's gone out. Okay. So I file my business and I file my personal every year. But my business ends up paying nothing. Okay? And this is where you have to get a CPA involved that knows what they're doing, because some of them will say, well, no, you made 100K, you have to pay taxes. And then when you draw, you have to pay taxes personally. No, absolutely not. It's only on the draw. Okay? So you have $100,000 in the bank, you paid your $10,000 in expenses, right? So now it looks like you made 90, okay? Two scenarios here. If I draw the entire 90, right, then I take out the 24 and I'm taxed on that, right? So what's that number? 66? Okay, so for just for easy math, so if it's 66 and I'm paying 20%, then that's like 12,000 something, right? Instead of 15, right? So I already saved 3,000 plus in taxes, just right there. Okay. If I don't have to, right? If you're not the main breadwinner and you don't have to pay your bills with all of this, and let's say at the end of the year you made 100K, and you took and you had 10K in expenses, so you have 90K, and then you only drew, let's just say you drew half 45K. You have 45 in there. Okay. Now what you're doing is you're paying this 20% on 45K, right? Because that's what you drew. That's what you pay taxes on, because you took that personally as an officer of the LLC. So now you pay 45, you get your standard deduction of 24, you have 23,000 left, you paid 4,500 in taxes. Okay? So your, is that right? Yeah. So because it's 45K minus 24 is 23,000 times 0.2, 46-ish, right? So you paid 4,600 in taxes instead of that.
I didn't follow you. Are you saying you pay 20% of 45?
Yeah.
Okay, so that's like
Well, no,
after the
no, because you get
24,000.
the standard deduction
Of 24,000.
of 24,000,
Oh, I see.
right? So you're only paying taxes on 23,000. So, which is about 4,600, instead of paying this and claiming everything as a single entity.
I want to say that's gone up actually. It's not. I think it's more than 24,000 now. I think it's like 27,600.
Is it?
Mm-hmm.
Cool.
I just
like
pay
that.
taxes.
Yeah.
Yeah.
So you see how this is beneficial,
Mm-hmm.
especially if you're not the breadwinner. Now, don't get me wrong, okay? Eventually, when you draw the money, you're going to pay taxes. But if you're only drawing what you need, and everything else is an expense, now keep in mind, okay? Once you have this, and you have this account, you can use a lot more than just this.
I have a question for you. If you make money doing anything else, can it go into the S corp? Like, if I'm doing hygienist on the side and I want my money to go in there too, because I
No,
can't.
because that's for that business. You
Okay.
can't commingle business.
Okay.
So I guess if you're okay, so what I was saying is if you're looking at this and you're like, okay, these are my expenses, right? And this is what I can claim, but I'm not spending 24,000, so I'm not claiming anything. That is what people, when they do these tax classes, do not tell you. As a single entity person, as an individual, okay? They're like, keep track of your mileage, keep track of your meals, keep track of this, that, and the other, right? You're never going to get over the standard deduction unless you are a very
You're
high
doing
dollar
large.
agent, right?
No,
Yeah.
you are. My guy just did it. He takes all that off the 100,000 and then gives me. He takes all those expenses off the 100,000.
Who's this?
My CPA.
Okay.
He just took all of my expenses and took it off the top out of what I made, and then he
On real estate, or are we talking about your
real
husband's
estate,
business too?
real estate.
And
Well,
how
for
much
everything.
how much did you spend on real estate last year? How much was your expenses?
My 6,500. For everything
Okay.
with pictures, all the things I did last year.
Okay. So your CPA, as I understand it, is not technically following the law. Because you're an individual and you have a standard deduction, this has to be over this number to take it. Now, if he's giving you the 6,500 and not the 24 or 27, whatever it is, he's doing you a disservice. He needs to
doing
take the
both.
full deduction.
He's taking the.
If he's doing both, he's not doing it right.
Okay, 'cause
Good
he
luck
said
when you get audited. Now it's his fault, his problem, right? But if you get audited, that's going to be a problem because you can't have both. Can't have both. Again, I'm not a CPA, but I've been told that by several
Okay.
CPAs. You cannot have both. Okay?
So you either get the 24 or you get the.
Yeah, you get whatever your expenses are, or you get the 24 or 27. You get one or the other. You can't have both. So if you're an agent that is, doing 30 million in volume a year, your expenses may be more than 24, right? So then you would use your actual numbers, but then you got to track them all, right? And so that becomes a hassle. Typically for agents, you're going to fall into the standard deduction. But here's the thing. If I have an LLC and the LLC wants to take a client to lunch, I use the LLC's account, it's automatically deducted. Right? It's automatically put into expenses. I just have to keep track of what happens in this account. Right? Because an LLC doesn't get a standard deduction. It's just income and expenses, profit and loss, right? So I could do a lot of different things and put a lot of different things underneath here, right? I mean, I could take a trip to Cabo San Lucas with my wife, who's also an officer of my LLC, and it is our annual business trip,
Team meeting.
right? Did you know when you step this up and you go like another layer and you go corporation that they are required to have an annual meeting and it can be anywhere in the world?
Can you
Mine's in
change
Colorado.
the status of an LLC?
The tax status?
Yeah, like to an S corp. Because I have an LLC
Yep.
for my investing and stuff.
Yep.
But I don't know if it's an S corp.
Yeah, you just tell the guy, hey, I would like to file this as an S corp. Now, depending on what you're doing, ask your CPA some questions like, would I benefit from an S corp? Would this be better for me? Not every situation is it better, but in real estate, this has worked very well for me. And so I use that account if my wife and I go to lunch, we talk about work, boom, that's right. That's $100 that's going into there. If I do anything with anybody that has anything to do with real estate, and maybe sometimes not, business expense. So
Can you fill up your gas tank on it to go take clients?
yeah. In fact, my LLC pays my truck every month because my truck is for business, right?
Edge, right? Like miles you use
No.
as a.
Now again, we may be in a gray area, right? I'm not a CPA, but I know that my LLC pays my truck payment every month.
Was told anything for your house that it that flags out audits, but
It
I'm
does.
not.
Mine
Yeah.
told me not to do that.
So I personally, my internet I have going through my Care Home LLC because the home incorporates everything. So, but your cell phone, those are expensive.
Speaking of,
I have my cell phone on mine and I have my 2 kids' lines on it. And again, that's gray area, right? Like, but if I get audited, it's like, okay, good job. You got, $600 out of me for the year because I had to deduct my 2 kids' $10 a month lines. You know what I mean?
So how should I be setting up? Out?
So you set it up as an LLC and you give them the incorporated paperwork, right? So that they know
Okay.
that this is a business account with an LLC. You are a person, an authorized user of the account for the LLC because you're an officer of the LLC. Okay, so then you get personal checks, right, from real estate, and you just put it into that account. Now it's automatically filtered into your LLC income. Yeah. So you get a commission check. So you get a commission check, and you even though it doesn't say the LLC's name on it, it says your name. You deposit it into your LLC account, and it becomes LLC money.
Okay, so the account.
And that's how you're claiming this is. Right.
Okay.
So with the extras things that you can kind of put on here now that you have an LLC, you could get. I mean, most people aren't going to get past like 15. You know what I mean? They're just not don't have that many expenses. But if you can take an extra $5,000 to $7,000 off, $5,000, 20%, $1,000 that you're not paying in taxes. So you're definitely better off this way. Because like we said, even if you take it on, if you take the whole 90, you're still going 90, 24 off of that, 75 becomes 65, you know what I mean? And you're still saving, right?
So I was told for any that I have not. I'd be able, since they're technically state.
So, okay, I haven't set this up, but I've heard people say that, and the reason that they say that, I believe, is because it's an extra layer of protection. Right, okay. So that they can't go after all of your properties, they can only go after the one. Personally, I think that's BS. I think that if you are the officer of 10 different LLCs, they're still going to go after you for everything that means they're going to go after all these ones, because most people don't have their LLCs set up by a professional who's got them the language in there so tight that they can't go after anything else. Now, the other thing that I've seen people do is they'll get the 10 LLCs for all 10 of their investment properties, then they'll start a corporation. The corporation manages the LLCs. But again, they're just going to go up the chain.
I know. I was just
Right?
They
gonna
don't
say,
really though. My sister-in-law owns 75 properties, and she has each one of them on its own LLC, and then they made a corporation. And they actually have a layer between the corporation, another layer. There's like
And have they
Stahl
ever actually
Enterprises.
been seriously sued?
No, but yes, they
So-
have. They actually have been sued. But they also have so we did a version of it because Frank over here, he told us, sir, he owns a lot of properties in town, and he's an attorney. He said, you don't need just LLC one, put them all underneath it, and then do a huge umbrella policy. We have a big umbrella policy. He said as soon as somebody hits and sees that there's an easy $1 million or $2 million, they're going to take that. They're going to go away. So he said that's the way he has his set up. So that's what we did. We did.
Yeah.
We don't have a separate LLC for each of them.
Yeah. Sauer's a good return.
He is really good, and he owns a lot of property. But just
So
to make sure it.
where did he base your corporation out of?
We don't have a corporation. My
Okay.
sister-in-law does. My sister.
And where's hers based out
I
of?
think it's Montana or Wyoming because there's the laws are different.
So I think it's
Delaware.
Wyoming that the can start a corporation in Wyoming, and the state does not record the owners of the corporation or the CEOs or whatever. So it's a
Hard to
phantom
define it.
corporation basically. If let's say, and here's the thing, so your friend's been sued, got a lot of LLCs, but I'm curious as to for how much money.
It's one of their apartment complexes, and someone slid down the stairs.
Yeah. So it was an injury, right? Which, a court's going to give them $100,000 for expenses or something like that. So in that situation, it probably didn't even hit the level of we're going to take all of your properties, right? Mm-hmm. So it probably wouldn't have made a huge difference. But if let's say you had a wrongful death, they wanted a couple million, right? Mm-hmm. we have to understand the way that this works and the fact that some of these setting up of LLCs and corporations is just overkill. So the way it works is, okay, we're going to sue you for $1 million. And an attorney takes the job and he looks at assets and he's like, well, what do you have? Okay, you got a home. You got your personal home, right? And you got 10 properties. And they're all mortgaged, right? And between all of them, you got maybe $250,000 in equity, okay? So there's a quarter of what we're trying to get, right? Now, what does the corporation have? Well, corporation is you, right? And so you have some cars, you have your personal house, you have, you know, are they going to get to $1 million in raw assets that are not leveraged? Right? And if they do, re-leverage yourself. You know, if people always say, well, don't buy this until you can pay cash. Really? Because then it's completely on the line. You know, if I can get a decent interest rate and I can have this property that's in the black, right, and it's got a mortgage on it, nobody can take it except the bank. So now when somebody sues me, it's like the bank's getting paid first. That's how their lien works, right? And so now there's only $50,000 you can get from me. You're nowhere near $1 million, and most attorneys are going to say not worth my time, right? So we talk about doing all these things and these layers and all this cool stuff, and it sounds great. I'm protected. Nobody's going to touch me, but you don't have enough for them to even go after.
Well, that's why Frank said just do $1 million umbrella
Yeah,
policy.
just do an umbrella
He goes,
policy.
as an attorney, I look at that and go, that's an easy $1 million. I'll take your
Yeah,
case.
exactly. I'll take it. I'll take from your insurance company. You pay
Yeah.
your deductible.
And we're
Boom,
done.
we're all happy, right? And
It's
they walk
easy
away.
peasy and
Right.
everybody's
Yeah,
out the
exactly.
door.
And
But
you
the
get
thing
the-
is but the
Like
thing is,
drive-through
Stacy,
money.
is if you don't have $1 million in equity and personal stuff that they could take from you, then I would say, and this is just me, you're overinsured. Because if they can't take that much anyways, why would I give it to them voluntarily
Well, they're all
and
paid
then my
off.
premiums go up the next year for the next 5 years because I had a claim,
So I need to
right?
go mortgage them all because they're all paid off. I need to go mortgage them all.
I would have done that when it was 3.5%.
But no,
no
yeah, you
reason
can,
to.
you,
But
you
yeah,
can
I
still
mean-
though, you can go, you could still be making money, you should be taking money out, and you should be
Realistically,
making lots of
Stacy,
money
if
out
I
of
was
it.
you,
But
if,
that, I would be spending it.
I'll tell you exactly what I would do if I was you, Stacy, and I had them all owned outright. I would go and I would take a no more than 50% mortgage on a couple of them at least, and then I would go get a mortgage on 6 or 7 more.
That's exactly what we're waiting for.
Yeah.
That's how we got to where we are. We
Yeah.
did that with the others, and then did a 15-year note like on them at a
Yeah.
low interest rate and got them all paid off. And I'm a weirdo. I hate to
See-
have debt, so I just paid them off early. So, but that's what we're waiting for. We're waiting for a little bit of a downturn in the market to turn around and buy a bunch of.
But right now you're able to get them for less.
I think after the first year, maybe less.
So she's thinking that the market's going to continue to go
Yeah,
down.
I think the
Yeah,
market's
but
gonna
not
Oh.
at the rate that you, well, not at the rate that,
Here's the thing, though.
Yeah.
Here's the thing, though, and now we're kind of morphing into
Yeah.
how to investing.
Yeah, I
but,
love this
but,
conversation,
okay,
though.
so the thing is, though, is that the rate doesn't matter to you.
Mm-hmm.
Rents are high right now,
Yeah.
right?
They're coming down.
So
They're coming down.
if I have a property and Harlan's paying the mortgage or paying the rent, which is paying my mortgage, why do I care if it's 6 or 8%?
as long
He's
as you
paying
get
it,
cash flow, as long as you get
right?
cash flow.
As long as it's in the black,
Yeah.
it's
Yeah.
fine.
Yeah.
And then if you
And
want
if
later
you're
on,
cash flowing at this rate,
Yeah.
what do you get cash flow when the rates are low?
Right. Yeah.
and think of it this way too.
Yeah.
I mean, you can refinance it later if the
Okay.
rates really get better. And again, you're like, yeah, but that costs me money. No, it doesn't. It costs
doesn't.
him money.
Yeah, I see. Well,
It costs him money.
I don't
He's
think
paying
that the
for it.
rates are ever going to be that low again.
No, I don't think so either.
So-
So I think that we're going to get to a point where they're like 4.5%, 5%, and that's going to be it.
Yeah.
And then people that are going to be at 6% are going to be like, why would I refi? It's not enough money to make it worth it. But see, this is a difference of people that there's two different schools of thought here. One is I got everything paid off, I got no bills, this is just income. Well, yes and no. You paid through the nose on a 15-year note for a while, right? And so you paid a lot up front, and now you're seeing the benefit of that. Whereas other people are like, and this is me, I would rather have it leveraged so nobody can take it from me but the bank. Somebody else is paying for it. I don't care if my interest rate's 7%. They're paying for it. I'm in the black, and in 5, 10, 15 years, whenever I want to, that's when I'm cashing out.
We're 10 years older than you, and he's 10 years older than me. So, you know,
Mm.
it's our age that keeps us from taking that next step again right now.
Mm.
Well, I think that I mean, you have a CPA, but what I've heard some people who is that, and I don't know how right this is because I'm not there yet, but I think like how much a bank is willing to lend depends on your current position as far as you're
Yeah.
working.
Oh, working.
Yeah, because once you're not working, unless you're showing everything cash flowing, then they're not going to be willing to loan you
Loan
as
you money.
much.
Right.
So you should be doing that.
Soon.
Yeah.
We're waiting for that sweet spot. Because
Yeah,
we
I'm
did
not-
it a
yeah.
few times. Like we 1031 exchanged some things, got better properties, got a multifamily property with it, you know.
So it's hard to find the sweet spot.
It
That's
is.
the issue, and for every investor, it's it's like you want to buy when it's the lowest. Well, how do you know it's the lowest? You don't.
Yeah.
It's like right now. Look at what we have going on. The Fed says we cut the rate by 1/4 of a point. Hooray! We're going to keep doing it the next couple of sessions, and then 2 weeks later or something, they say, well, we're not really sure about that, right? So now everybody was waiting. This could be the lowest right now. It could be. You don't know what they're going to do. They just went wishy-washy on us.
Right, which is why it doesn't matter as long as you can cash flow
As
now.
long as you can cash flow.
Yeah.
As long as
And
every
then
deal
people
you're
wanna
like-
sell
like
it when
the
it's
lady
the
that was
highest,
here, she said, I'm
right?
I'm still
Yeah.
moving
Right.
because as long as I can cash flow, I have to.
My husband's one of those. We got to get it off market, and we've got to, And I'm like, let's go down to Lennar. Let's take some money out of what we have, and let's just put down 20% and buy us a bunch of Lennar houses. I want to own the whole street right there, and then just.
I would put down, with the equity that you have in the other homes, I would leverage them, like I said, no more than 50%, and I would buy new ones at no more than 50%. I would only buy what I could for a 50% loan because I know it's going to cash flow that way,
Yeah.
right? Because my payment's low and rents are high right now.
But my question about this was more so like because you're using it as so I guess this is very specific. I'm sorry that it's very specific, but my whole goal is that my income is only to make more is for retirement, right? So whatever I'm making, I want to then go buy real estate with. So if that's what I'm doing, how could I use that as expenses here within this LLC?
Okay, so what you would do
Good
there,
question.
you would take this money, right, and you're gonna just let it pile up. You're not gonna take any. This is not gonna happen. You're making $0, right?
Except for my expenses, right?
Except for your expenses,
Right.
yeah, which you're claiming on your thing, and that's all going to be filed into your LLC and whatnot. Like what are our expenses here? Okay, then what you're going to do is you're going to get a DSCR loan, which is going to have a little bit higher interest rate, okay, but they'll put it in your LLC's name, and then your LLC buys it from your LLC's account. Your LLC owns it, and it's an investment for your LLC. So you never drew anything. You don't have to pay anything. It's an investment. It's not income.
So is that considered
That's
real
not-
estate, like art, like
That's
with
what I'm wondering. That's
like-
what I haven't.
like her income versus her
'Cause if I'm
investment
shifting
properties,
into
is it
an
all
investment,
can be
I'm
in
paying
one
taxes.
LLC?
Mm-hmm.
Like what she's making with her personal real estate and then her other.
Can I mix it? That's what I
Yeah,
was wondering
yeah.
whether or not I should have separate LLCs. Like, can I go and say, well, the house that I bought, I'm going to rent fully furnished. So I'm furnishing it, right? So
Mhm.
aren't those all expenses? That's
They
I'm
are,
using
but
that-
here's the
yeah.
problem. Is once I take money out of this account for expenses or down payment on a property that this LLC is going to use, that's a draw.
So it needs
That's
to be
taxed.
within the same LLC.
Yes, if you're trying to avoid taxes on it, it has to be in the same LLC.
So I can't do dental
then-
hygiene that way, but she's asking if she can do her.
But she can't. It's the same thing.
That's
Instead of money
that's what we're
going
asking.
in that doesn't have anything to do with the business, it's money going out that doesn't have anything to do with the business
But it-
because it's a different business.
Because it's
It's a different
business.
LLC.
That's what I
Yeah.
So, but that's if I have it as a different LLC.
Yes.
LLC it together.
If you have it as the same LLC, then it is an investment for this
Right.
LLC,
Right.
and so we're investing money. We're not drawing money.
Right.
No taxes.
That's why I had it. I need to speak to. That's why I haven't
Yeah,
bought.
I mean-
right now, all my properties are just in my name.
I'll say it again for
But-
the 10th time. I am not a CPA, but this is how I understand
play one on
it.
television.
That's why I haven't
Yeah, right,
made any
yeah.
of those moves
I'm
yet,
like
'cause
I'm
I
like
don't know
Dr.
what
Phil.
supposed to
I'm
do.
as much of a therapist as Dr. Phil is. You know, like I can play it pretty
Well,
good,
can
but
we have a CPA come talk to us?
Sure. Do you know a good one that'll actually give us straight answers?
That's the hard thing.
Because the problem is even my CPA, I have to tell him this stuff, and he goes researches it. And, oh yeah, we can do that. So it's kind of
Somebody's at your house.
somebody rang my doorbell. So it's kind of like I would love to have a CPA come in and explain all this, but I don't know one that knows all of this off the top of their head. They have to go look it up. They have to figure it out. And most CPAs will just be like, okay, so let's do this because it's easy. It's like H&R Block, right?
Yeah,
Anybody
I
can
was
do
just
this.
gonna say.
Right. It's like they don't want to do this because this is work, right? So y'all find a good one. You let me know.
So my daughter-in-law is a CPA, and my son does this.
Can they come in and
Yeah.
talk to us?
I'll talk.
Yeah.
They live here
If
in town?
if they know what they're doing with it, I would
We
love
need her
legal
in our
answers
life.
Yeah,
because
she does his taxes.
She may pick us all up.
Yes,
She might.
because I feel like
I
they
can't
don't
find.
want it
I
to be-
hate mine, and I can't find a better one. That's just where I'm at.
I like mine.
Not
but
that I
like
hate
what he
him. I
does,
shouldn't
yeah.
say that. That's a strong word.
He doesn't do enough.
He just It's
Yeah.
like I gotta push
That's
him
fine.
to try to save my money,
That's
and then I
fine.
gotta pay him. Like
Well,
what the
no.
hell?
My brother's got several properties, and he also owns like 8 businesses. He's got a porta potty business. He works with Taylor Sheridan. He's got a movie. He's got all this stuff. And I know
8
for
businesses, 3
yeah.
is enough for me.
No, what he's a big timer. He just sold his porta potty business for $18 million to a
Is he
guy in
married?
Canada. Yes, but he's got like 15
Why, were
LLCs
you gonna,
and one
switch sides? You're
corporation.
gonna start batting for the other side or what?
No, I'm-
18 million?
daughter.
I'm like, is he married?
He's got a daughter.
No.
Not at all.
I
I'm
got a
just
daughter
saying,
that looks
like,
right fine.
you know, how do you find time
18
for all
million.
that?
Well, that's why he's younger than me, and he looks like he's 20 years older than
Yeah.
me. But he
See,
owns
no-
like 15 LLCs, but he also has that one corporation that runs all of them. So
Yeah.
everywhere he goes, it's like you said, they write all that off because they talk about LLCs.
My mind was more going towards the
He's gotta explain.